general, a lot going on in metals and mining and gold. And so, Brandon, what do we have on the docket?
Yeah, so we got jobs numbers we'll talk about. We'll look at some of the payrolls there. I mean, there's been some changes kind of from the BLS starting to account for an increase in the population size. Did not impact the unemployment rate as much as we probably thought. We're going to talk about leeches. We're going to look at
Leeches.
Palantir. We're going to look at Mag 7. And the physical commodities market. Gold is representative, silver. We're starting to see some movement in copper as well, which is significant. And we'll talk precious metals, time data protect. We'll see if we have time, Blake, to get to bulls and bears. But we'll be talking about some specific, obviously issues in terms of precious metals. But so let's catch the market right now. In terms of ES, we got the jobs number at 6:30 because everything should revolve around mountain time. Some volatility here. So Blake, what was the main takeaway from the jobs report?
Well, the main takeaway is it was a miss from expectations and pretty mediocre growth. At least if you only look at today's report, or meaning this month's report. If you look at revisions, last month was revised up big, and but overall we were supposed to come in at about 169,000 jobs, but came in at 143. So we missed on that,
Mhm.
a little bit soft, and yet what do we expect? Every time we get a mediocre jobs report, the market says, oh wait, we get to have free money. Keep it
Yeah,
coming, Fed, right?
what's
We
bad is
react, we
good
always
and good
react to
is
that.
bad, right?
Yeah. We want to have the Fed step in and give us cheaper money. We want to have those rates cut. And what we saw is a huge volatility swing on the NASDAQ futures. I was watching those. We had a 150 point swing roughly in about 2 minutes. And then we climbed all the way up near the top, and now we're slowly, lightly rolling over, but it's still bullish in the response because we're hoping for cheap money. It's the way we play out. But getting into the details, I don't know if you looked very closely at it, but really the only sector that declined, coincidentally, and I know you didn't have this plan because you didn't know what the number was going to be, was miners. Miners
Interesting.
saw a decline in jobs.
Interesting. Given our
Negative,
discussion
not just
on
slow
commodities
down, but
today.
negative. Yeah, and we'll come back
Yeah.
to that.
We look at average hourly earnings as well, 0.5%. That's way above what we were kind of anticipating here. And may explain, I mean, some of what's going on in the bond market. We saw kind of maybe that might be a little bit of a miss hit there, but we're seeing some weakness in the bond market as yields are kind of backing off lows right now. I forget about the stupid CGI thing. Wish they'd fix that. Anyway, we're seeing yields rise, prices decline in the bond market. So again, we're kind of pricing in some inflationary pressures at the same time. We're thinking, okay, jobs aren't as good, maybe some rate cuts. So we'll have to see how this plays out. Now, we talked about the dollar yen last week. My mic's in a different spot today, so it's kind of in my way, but we back things out. Does this strengthen the dollar? I mean, we look at kind of a breakdown from this kind of pennant formation. Nice move, strengthening yen against the dollar. So if we're poised to cut rates, I mean, ostensibly it's when the market's gone up here. Although the inflation pressures with wages are there, the eurozone's cutting rates. I mean, are we looking for yen strength? Are we going to see lower prices in yen? Sorry, lower prices in the dollar yen and euro yen. What's your thoughts? Are
Well,
we going to see the
let's
unwind?
for those of you that aren't currency traders, when you're talking about lower prices in the dollar yen, just to explain what that means, if it's the dollar yen, it means the US dollar is weakening and the yen is strengthening.
Mm-hmm.
And what that generally has been in the past is short covering yen because yen have been sold for decades. And so the US dollar weakening comparatively to the yen is saying the yen is strengthening more than the dollar is in this situation. Now, the dollar, should it be strengthening or weakening? That's when you have to go to the euro US dollar compared to the euro yen and kind of get that triangulation going on to see what's really going on. And this is just consolidation for me as far as the euro versus the US dollar. So that tells me the story is all about the yen. And
Yeah,
I think that's what we're seeing in that chart. And maybe you disagree with that, but so
I
just so
agree.
when you hear this, if this is going lower, that's not yen weakness, it's dollar weakness versus the yen. And so
Yeah.
this is the yen getting stronger, pulling back off those highs. And whether it can break free from 150, that's a question, but it's certainly pulling back about what, 5%? And that's a
Yeah,
big move for
it
currencies.
is. And I remember, 20 years ago, going to Japan, it was a 100 yen store. We have dollar stores. They have 100 yen stores. Now it's a 150 yen store, right? If we're kind
Yeah.
of using that comparison here. So as this goes down, the yen's buying more dollars with it. So again, this is a sign if we see a continued breakdown in the dollar yen, that's just saying, hey, look, we're unwinding a lot of the yen investment that's converted to dollars, buying US assets, euro assets, all this stuff around the globe. And as they're raising rates, it's causing issues that might potentially pop. And so as we kind of think about how things are moving in terms of the currency market, we also have the physical market. We look at the last week and gold is topping the list. The last 12 weeks, it's one of the best performers absent communications and financials in terms of sector performance. I mean, gold is outperforming the S&P rather significantly over almost 3%, over 3%, through over 3.5% in the last 12 weeks. The market is not generating any real returns. And so we're seeing softening in the job market. This presents risks to the broader market. And if you think risk to broader market, this brings into this leeches man thing. So we got jobs. Man, I just can't help but think of Stand By Me. I didn't want to bring up the picture where he's like, he drops and then passes out. I'm like, but the reality is, with all the USAID stuff and all this stuff going on, we realize that we're subsidizing a lot of stuff. And a lot of companies are benefiting by this. And we had a company this past week in Palantir. I'm going to use this as a case study in Max 7, but Palantir, for example, had a huge gap here following its earnings. And so I thought, well, let's take a look at their earnings and the positiveness of their earnings. And here we go with Palantir. And so Palantir Q4 income statement, 455 million from government, 372 million from commercial. So we're deriving most of our revenue from government. Great pass through, 79% margins. Their cost of revenue is really low. But then you get to operating expenses, 642 million. They generated an 11 million profit. They're getting interest on some of the money and cash they have. So they generated a net profit of 77 million. This is basically a $250 billion company generating 77 million in profit, but paid out last quarter over 142 million in stock-based compensation. So if we think about leeches, I mean, man, if you are a principal or an insider within Palantir, it certainly pays.
How do I
I
get
mean,
that position there then?
right. So basically, what are we doing? We're taking a huge chunk of our revenue. This is like Twitter many years ago. I mean, look, I mean, this is just horrible in terms of what? Accountability to shareholders, right? They're just
Mhm.
pilfering the company. Over 300 million in stock-based compensation affecting in terms of the supply of shares. If we're to think of this in terms of a cryptocurrency stock like Ripple, and if you're looking at share supply or token supply, you'd be saying, my goodness, this is not a buy. And yet the stock jumps dramatically this past week. So when you think about government being a huge part of the bottom line or top line here, there is no bottom line, by the way. This is a big deal, right? Are we going to engage in austerity measures? We're looking at all aspects of government, the Doge. So what
Well,
is the effect on Palantir? We look
no,
at
it looks terrible. I mean, you look at how many things have been cut there, and it definitely goes negative really quick. And
absolutely,
coincidentally, I did ratios on them yesterday. I wasn't going to talk to you about this, but since you're
yeah.
bringing it up, I did some financial ratios on it, and they had, I went to Guru Focus, and when you compared your return on equity to others in the industry, return on equity to its own history, all this stuff like that, PE, PEG looked fine, but
Well, and
if
that's
you're,
going back to the most
yeah,
recent report. There was a big drop in income, right? So
yeah,
I mean, they're trying to get while the getting's good, right? And they're taking as much out of the company as they can as a again in stock-based compensation. The Max 7, this is a free cash flow yield here. What are we yielding relative to bonds? So think about this for a second, right? We've got what, 2.8, 3, 3, 2. I mean, all this stuff right here is below the 10-year treasury yield right now. So we talk about the return in the market for next year. The earnings yield right now, free cash flow yield, are less than what treasury bonds are paying. We look at the massive run in Mag 7 stocks in terms of appreciation against other past bubbles, right? Essentially, we're seeing is that huge concentration, obviously 2020 impact these stocks greatly and disproportionately. And so they were huge benefactors. Apple was one of the top companies the Fed bought in terms of their bonds when they're initiating their program. And then you start to look at the analysts are slashing U.S. earnings forecast. This is from Citi, using Bloomberg terminals here. We're seeing big cuts to earnings expectations, and Mag 7 is the biggest contributor, massive contributor to S&P 500 earnings. So one of my biggest themes regarding tariffs was the fact that it's going to affect Mag 7 stocks the most. Again, leeches, man. Okay. So we're going to start to see valuations potentially come down, which is a good thing if you're a longer term investor looking to get in these names. But in the short run, as we find out, there may be some downside. Obviously, Google saw that this week. Big drop yesterday. Um, so, I mean, kind of what's your thought, Blake, in terms of, I mean, how do you view some of these companies, Mag 7? Are you more bullish on these kind of companies, or are you pulling back in terms of
Worms,
expectations?
worms, Roxanne. I was afraid of worms. And so I think that they are definitely overextended. I don't think that we've priced in over and over and over again, well past any type of growth rates we should have expected. I think, like you just pointed out, that we're going to see these corrections because you can only prop it up so high so far. And one of the things that I'm going to circle all the way back to jobs and say, what do you think is happening as we announce all these government layoffs? Where do you think those are going to show up in payroll? Because this payroll report, which is soft, did not include the thousands and thousands of layoffs or buyouts that they're talking about just in the government level,
Right.
or the announcements like at Meta. And if these guys see less money, how many layoffs will be in Palantir itself?
Yeah.
So I would tie it kind of full circle and say, watch for layoff announcements in the Mag 7. And yeah, I'm not bullish at all. I just it's a matter
Yeah.
of timing on them.
And I mean, look, we've had a flood of immigration the last few years has not been fully accounted for, and I'm not sure that we're seeing the unemployment rate go down. Expectations were for it to tick up, but we're going to start to factor in, even if we might be deporting people. Doesn't that's it? There's a huge delay in this. We might feel the effect of just rising, population due to immigration that could drag on unemployment rates. So a lot of people are expecting this to tick higher by maybe 5 basis points. That's maybe 4.15. Instead, we actually dropped 10 basis points back to 4%. And so we're going to see a continued drag potentially for another year as we start to account for past migration, higher, more people in the country that may affect this rate. And we're basically trying to work through a lot of the jobs, shadow jobs added in the last year or longer. Again, because we weren't accounting for this among other things. And so again, we may see this tick up as we continue to factor in this stuff over the next year, even if we're deporting or whatever we're doing here. So, but again, we'll potentially see continued weakness in the job market in that respect. And so we think about tariffs and the impact. We got to think about tariffs and physical commodities. So one of the things that's going on, and let's ask the question: how many of you folks are following gold right now? Feel free to comment. How many of you are
I'm raising
following
my hand.
gold at the moment? Gold had a little bit of a downturn yesterday. We came off our lows. If we look at gold futures right now, that's GLD. We look at gold futures at the moment. We're back higher here, but this is a decent move here since when? Since the beginning of the year. Okay. We're testing all-time highs in gold. Why? Silver. So Don had a silver trade here on. They closed right here last week. Is silver about to break higher? So a lot of you guys are following the precious metals market. Blake, what's kind of your first kind of take here on the moves you're seeing in gold and silver?
Well, we've talked about the idea that we're still seeing the lift and that gold is breaking to the record highs. And as long as we see the inflation pressures, and I'm going to call it that, while we're still anticipating possible rate cuts, it's going to continue to try to lift gold and silver as just an inflation hedge, a pure inflation hedge. But silver has hit this roadblock on its short-term highs, and that usually is an indication that gold is going to slow down. And as far as pure technical,
Mm,
um, at least the way I was watching it. But it's tough because it's hard to chase something at record highs.
it is.
And but it looks pretty positive. I mean, we're still seeing it. And if gave you the link to Kitco, this is just today, the exchange rates today. But even with everything that we saw, that slowdown on gold moving higher, gold is up in everything except for the Brazilian real. So Australia,
Well,
Canada, if you look at every country,
yeah.
we can scroll down, you can see the
Sorry,
yields.
Mike.
You're fine. Um, you don't have to go there if you don't want to.
Oh,
But
okay.
so yeah, Kitco, if you scroll down from the home page, you should be way down at the bottom. Keep going, keep going, keep going, keep going. There it is.
Right
So
here.
this right down a little lower, exchange rates.
Right here. Ah, there we go.
This
Right
is
there. All right.
gold prices, the percentage change and dollar change or currency change. This is showing that gold is up 0.42, 0.22, 0.6, and every one of these countries. So this
Yeah.
is not just limited to the US, is what I'm getting at. We are still seeing an inflation hedge on the global scale.
And we think about, I mean, we're thinking about inflation hedge. We're talking about what? Past monetization, printing from COVID and beyond, going back a couple of decades here. And there's also another thing happening. You're seeing the breakout in copper as
Hmm.
well. And what's playing out right now, and we'll look at this little note here: gold in the Bank of England vault is trading at a discount to the wider market. Basically, what's happening right now is you have a scenario where Trump is saying tariffs on what? Potentially Europe, tariffs on 25% tariffs on Canada, Mexico. There's the threat of tariffs. And what's happening right now is we're seeing significant repatriation of gold and commodities, silver, et cetera, copper, back to the United States. And why this is such a significant point here, trading at a discount, is that the London Bullion Bank market right now is out of gold. They're trying to tap the BOE for gold, and there's weeks delay in order to get gold. And of course, contractually, they're able to do that. But what's happening is that people are trying to front run and try to get as much gold for delivery in the United States. And we're seeing in the futures market for gold is we're seeing that people are wanting to accept deliveries. I talked about this about 5 years ago in 2020. The same kind of development, except for this might even be bigger. And the fact that the receipts for the Bank of England are trading at a discount, it's making it viable to basically fly gold into the United States. I remember my dad used to just to decry, oh, we're shipping all of our scrap to China, right? We
Hmm.
just saw a scenario where China was buying our scrap and making hammers that they're not as hard as they used to be. Well, we also saw what? The SPR being drained, right? And a fair amount of that oil going to China. We're seeing that in the recent past, the last 20 plus years, there has been a run on the bank. It's not exchangeable for gold, but it's been exchangeable for commodities and other stuff. And recently, we're seeing the SPR, Strategic Petroleum Reserve, get drained, and we're selling some of it to China. They're sending us dollars. Again, our reserves. What we're seeing in effect with what's happening with tariffs is that's reversing, and it is creating a bullish condition. Even a 25% tariff, we get most of our gold from Canada, from Mexico, and Colombia. Blake, do we remember a recent headline about Colombia and tariffs?
We did. We saw them.
Yeah. I'm
I
sure
was going to pull.
Trump's like, do you realize we're going to put 25% tariffs on Canada and Mexico? And that's where we get most of our gold. And you're right there. So it makes you wonder if that was part of the negotiations. But what's happening right now, we're looking at gold and COMEX vaults. Essentially, we're seeing a massive increase. This is the first of the year, right? 22 million to 33 million. So we're seeing a massive influx of gold into COMEX. We're seeing a massive influx in gold. This is the last month from Switzerland. So because we're trying to front run tariffs, because what we found in the tariffs with Canada and Mexico, gold and silver, for example, were not excluded. So if all of a sudden we get a 10%, 20%, 25% tariff on gold, we're talking about a significantly higher gold price. And thus you can see the demand for gold to get it here for deliveries and creating a higher price. And what's happening right now, the scramble is on for gold and silver. This was big news yesterday, in case you missed it. Is that basically in order to what? Silver borrowing fee. If you want to borrow shares of silver, you're going to pay 12%. Okay. Look where it was on February 1. It was about 2%. We saw a massive spike in the borrowing cost to borrow shares of SLV. There's some thought process. Again, do they have the physical silver? Are they, in fact, de facto shorting silver to suppress prices? And if they are, if silver goes up, what constraints and what pressure is going to be born there? We look at yesterday. This is gold at the this is on 2/5 at 15:03 p.m. Eastern time, 2.36%. By 2/6 at 3:03 p.m. Eastern time, 4.69%. Supply and demand, folks. So, Blake, if we're talking about price to borrow going up, what does that mean in terms of supply?
Well, and I was going to back up on that as well. Keep in mind that when you're talking about price to borrow, the fee that you're paying, you could call it the cost of carry when you're carrying these positions. It's the cost of storage and everything because you're actually not being shipped a brick of gold, right? So, and it used to be that you'd say you're within a margin of error of what the bond rate is because it's the risk-free premium that generally drives what the basis of that. So what we're saying is that it's become so difficult to be able to get this, and everybody demanding the physical that the cost of carry, the cost of to be able to get this, they're going to say if you're going to grab hold of this at these prices, it's double.
Yeah.
You've got to outpace 12% return on gold for you to even be in a situation where you're not losing.
And what's crazy on this is that if we look at forward/GC, let me just take away these curves, but normally when you have that kind of premium, gold should be trading what's called backwardation, meaning that the slope should be this way, not that way. The net cost of carry reducing the forward price. But guess what? The futures market's not reflecting this, but the forward market is. It's a little bit different market, but again, we're seeing right now the futures market is not really pricing stuff in, but look what they're trying to do right now. This is the basically what you have to put up. Margin requirements were increased yesterday from 11.5% to 12.5%, right? For silver, 11.5 to 12. What's happening is the futures market. So we're seeing that the amount of bullion and silver coming into the COMEX, the commodity exchange stores, is going up significantly. We saw from 22 million to 33 million. They're raising margins right now, basically to say, hey, this is a paper market. So if we go to gold futures, this is a paper market for gold, right? You have to put a little bit up, right, to secure futures contracts so you can buy the gold in the future and take delivery. They're raising the maintenance. We're going to have to watch that. Someone mentioned, but miners are not going up dramatically in response. Look at the fact that, I mean, we're seeing a decent move. I mean, if you look at KGC, for example, since the beginning of the year, it's essentially gone from 9 to 12. It's a 30% increase. GDX. So what do we take away? 34 to 41. I mean, that's a 20% move in gold miners generally since the beginning of the year as we're starting to ratchet up the tariff thing. But so as we're seeing a scramble for physical, we're seeing gold get repatriated. We don't know how much gold the Treasury is holding. We haven't audited them, right? How much is the Fed holding? We're trying to draw in gold, silver, and guess what? It's making it viable for copper as well. So some of the breakout here we're seeing is due to tariffs as well. Repatriation. We need to secure physical copper so we can deliver in the United States because we don't want to have the tariff affect us. We got to quickly get it here so don't ship it on the water that can take weeks. Put it on planes because the paper gold, paper silver is trading at a discount. So now all of a sudden it's viable to get it here on planes, et cetera. And so this is a big deal. And this really is a fundamental shift that we're seeing. We're willing to tariff our neighbors, Canada and Mexico. We're saying basically what the USAID stuff, we're saying you have to carry your own weight. And we may be saying that to companies generally. So when we talk about the potential underperformance of Max 7 and leeches, man, we're basically saying to the world, you're going to have to start to carry your own weight. We're trying to repatriate stuff at the moment. We're trying to build our stores back up through tariffs, and it may cause some near-term liquidity issues. Lucy says AM mostly mines in Canada. Yeah. So for the miners, Blake, tariffs. I mean, if you are a gold producer in Canada and we put a 25% tariff, does that help your profits?
Yes, actually. And after time, it will, because what you end up doing it, the producers are not the ones that end up bearing the tariffs in the end. The producers are going to say, look, this is what I'm mining it for, and this is what I'm going to sell it for. And if you tariff it, it's generally like you talked about with your brother, it's usually the importers and the end buyer. And so whether we're talking about consumers inside the United States, like your grocery bill with agricultural products, or this one, I would say is actually kind of going to be fairly neutral for the producers. Um,
The
it
the
depends.
short the
That's a
short
tough
run
one.
effect is that they can always, I mean, what we're seeing right now is that there's a shortage of gold in London, which is again, that's the gold center of the world. But the problem is it's also the center of rehypothecation. So the
Right.
problem is you have one gold bar. How many people have claim to that same gold bar? That's the paper market, right? That's the fractional reserve system. Switzerland, they refine gold a certain purity, they certain size bars. But what's happening is that, again, Canada exports a lot of gold to the United States. That demand is going to be picked up elsewhere, right? Because they're
Well, I was
short
going to
on
say, how much
gold.
substitution can you get for
Right.
that? None.
The
And
problem is
where else can
the
you get it?
short run effect, right?
Yeah.
Going from exporting to the United States. But right now, we don't have the tariffs on. But if we throw it on, the short run transition could affect them in terms of we could have a near term excess of gold in certain areas, Canada, Mexico, if that tariff's put on, but they're just going to shift the exports to another place. And but again, we'll see what happens in terms of the tariffs there. But overall, the pass through, right? How much of it's going to pass through to the importer, right? They may refine it from there and that sort of thing. So we'll see. But here's the deal, right? We're seeing a near term boost in gold prices because of the threat of tariffs. Again, that is a two-edged sword. Is what if we don't put on the tariffs? Is order going to be stored in the London bullion market? But what this does denote is risk in terms of default and other factors. But again, right now, the dynamic is bullish for gold, it's bullish for silver. And again, from my perspective, the one we're probably thinking about is maybe bullish for copper as well in terms of the dollar price. If we're putting on tariffs, we're looking at a pretty significant breakout here in copper. So Blake, I mean, what's your kind of broad-based precious and industrial metal play?
Well, it's still going to be falling back to, I mean, I love Freeport historically and Rio. I'm going to add Rio to the mix. And someone else commented about that US doesn't have any miners. We have a lot of miners.
Yeah.
We don't have anything close to what Australia does. Australia has 10% of the metals mining, both precious and what do you call it? What do you call it? Regular
Industrial?
metals. Industrial,
Industrial?
thank you.
Yeah.
Industrial metals. 10% of the world's mines or the quantity produced comes out of Australia. But yeah, we have Rio and Freeport that we do have quite a few mines in the United States. And Rio's a breakout for me. And I not only through horizontal and trend resistance. So I think easy 66, but I think we could go 72 on Rio.
Yeah, I mean, you look at this, so I like to do like what's called seed waves, right? So this is kind of if we start a breakout, a
Mhm.
bullish trend out of this first leg, here's the pullback.
Yep.
And so we measure that as kind of a potential measurement. And so you look at trend targets, I mean, 223 to 261. So if we kind of complete first, second, third, gets up this area, pullback, consolidation, $70 is that kind of trend target there. Get you back to prior highs. I like that as a target. I was thinking about, commodity. I was looking at copper specifically, and I was thinking, this is one that back in 2020, I was really bullish on ERO. This is a Canadian company. We got to analyze tab here, right? British Columbia, but they produce in Brazil. So if you're producing in Brazil, you're shipping from Brazil to the US. Back here in 2020, we're talking about higher prices here, but this was a big move. This was kind of one of my COVID stocks. Again, we're producing in areas that may not be constrained by stupidity, just cutting the ability to produce, right? We may be in a position where if tariffs are instituted, and we saw a big selling day yesterday in ERO. But again, what happens? Again, we're looking for a breakout of 15. So right now, no traction. What we are seeing is that the company's projections in terms of earnings, we're seeing a really big shift. And I'll just show you this one thing. Bring up ERO here. So again, yes, I'm going back to something I looked at back in 2020 because we're seeing similar dynamics in terms of shortages. And so I look at this number right here, trailing PE and forward P. So this is the last trailing 12 months. This is the next 12 months. And so if this company can deliver on a significant increase in profitability and rising revenue, then what does that mean in terms of ERO? It could be trading at a pretty significant discount if they start to materialize in terms of those earnings. We're looking at potentially a double bottom breakout of 15, but we could see a big move a la 2020 in some of these resource companies as we're shifting away from. And I'll go, I didn't bring the slide up, but a lot of these metals companies are trading at a discount against historical averages. Whereas we look at Mag 7, they're trading at a massive premium to historical average. Do we start to see the gap close and we start to see companies with earnings and real growth start to and dividends, they're distributing to shareholders instead of pilfering the company? Do we see that transition? We're seeing it right now a little bit in terms of commodities here and precious metals.
Well, Brandon, we got 3 minutes. We knew that we weren't going to do bulls and bears really anyway. So,
Yeah. So we hit on some Rio. And, I'm going to throw this out here is that SLV and GLD, if you're going to trade gold and silver, yes, that's what to do. If you're going to own an ETF, if you're not owning physical, PSLV, those are Sprott, CEF, Sprott. These actually have more of an audit process. If we're concerned about how much is in store with SLV and GLD, not as much of a concern. You're not holding on to it, so it's a problem. But again, these are probably maybe preferable. But as a trade, I went through this yesterday. How do you trade the upside here? Knowing that, hey, if all of a sudden this short run aberration, is it short run or do we have some legs to this? 2020 had legs. Okay, so we may have a bigger move in store here. But how can you trade it with minimal risk and upside? If you look at the options market, okay, we look at volatility starting to rise. This actually dropped a bit, but this could be overnight stuff too. The bid-ask spreads are widening out here. But when I looked at this yesterday, we're saying rising volatility as we move out. We'll probably see that get back here today. In gold, silver, you could probably buy an upside call spread, buying around a 40 delta call and going about $2, $3, $4, $5 out of the money, constructing a $2 to $5 spread. And you can capture the upside. I think we did 270, 272 yesterday. And again, if we blow through 272, sell that one and buy a higher spread. Just keep rolling into this, meaning you're going to sell it and just move your strikes up and up and up without having the downside. But if you want as a longer term investment to hold physical, probably preferable, right? You can get it right now as a retail buyer. It's pretty available for now. So in 2020, it began to get scarce. Or again, you can trade spreads in GLD and SLV, or again, you could look at the physical, more of a audited physical product like CF and PSLV.
I think it's a good strategy on with that skew on the volatility. That looks like a really promising setup. I will talk about oil. Some people asked about oil. I'll talk about oil somewhat today. I don't know if you have that on your docket. But we do need to jump out of the way to clear the way for Don.
I talked about oil on Wednesday. I mean, the backwardation has started to flatten. So starting to see some weakness there.
Yep. All right. So thanks, Brandon. Brandon obviously brought the A game to a lot of the information today. So thanks for running with that. Thanks for being here, everybody. Have a fantastic week, and we'll see many of you in the Theo Trade main room later on today.
See you, folks. Thank you. See you, Blake.